Okay, hi, welcome everyone. My name is Ines. We're doing this series of workshop through the Regent Park Safety Network. We receive funds from the United Way, and it's merged with the Mothers of Peace, TD Learning Center in Toronto Community Housing. We have hosted mental health. What is mental health? Overdose prevention, anxiety in youth adults, know your legal rights, and now we're hosting financial with Melika Dolaty. So welcome, Melika, and you could go right in, please.
Thank you so much, Ines. Thank you so much. It is an honor. Thank you for the opportunity to be able to share my knowledge with you all. I appreciate everybody's time. I'm so excited. I mean, it's been a crazy time during this COVID, right? A lot of uncertainty, a lot of, thinking, what are we going to do? What's the future? So I'm hoping today my goal is for everybody to give you a little bit of peace of mind, give you some knowledge, give you some tools to work with. And please stay till the end because I would love to hear your questions. And if you would like to, go ahead and ask me anything you'd like during this call, please just put it into the chat. Mark will be asking the questions. So I look forward to anything you guys have in mind. If you need me to go over something again, I'm totally okay with that. Before I do start, I'm going to share a little bit about myself, a little bit of my background. My parents are immigrants to Canada. We are from Iran. I'm Persian. And we've been in Canada for over 26, 27 years now. I'm going to tell you, my background was not in the financial industry, actually. Right. And there was a reason why I got into the financial industry. Prior to this, I was studying psychology. As I grew up, I'm an only child. I was very aware and, very observant with my families. And I realized that my parents weren't taught a lot of things when it came to finances. My father worked 2 jobs. My mother worked. They were constantly working, but we always struggled. Okay. Finances was always something that we struggled with. And I always thought, why? Why do they keep working? I barely saw my dad growing up. He was there when it mattered the most, but he was constantly working. My mom was a stay-at-home mom at the beginning, but like I said, she ended up having to go to work. So I realized growing up that, it's very difficult to thrive, and the system is not made for racialized families to grow and to succeed because we don't know the tools, we don't know the resources, and we don't have the knowledge to progress and to live a comfortable life, right? And, it's tough when you are an immigrant, you come here. There's also a language barrier. So for everybody, I'm going to try to keep this, as simple as possible. I want everybody to be able to understand. But like I said, please feel free to ask me any questions. I'll tell you, growing up, we never had conversations about investments, insurance, none of these things. Coming from a culture, certain times, these conversations were, I don't want to say not allowed, but they felt like it wasn't right to talk about it. Right. And because it wasn't right, I feel like we were always, my parents were taking 3 steps forward, but they were always 10 steps back. Okay. And I want to make sure that we can try to create an understanding so that we don't have to struggle, especially with what's happened this year. We've been thrown into a different dimension that we've never even experienced before. So having that knowledge is so crucial. Just to take it back, prior to working in the financial industry, like I said, I was studying psychology. I wanted to work with children with disabilities. That's where my heart was, and it still is. I actually currently, right now, I specialize in disability saving plans for children and adults. But also while I was in school, I got OSAP. I had to get a job. I was working full time while being in school. And one of the things that upset me was my parents never had an education saving plan for me. And I asked my parents, I said, why on earth didn't you guys start something? All you needed to do was put $25 a month for me. I was very upset. And my parents told me, you know, I'm so sorry, but no one ever spoke to us about it. And I thought to myself, I never had a nanny. I never had a babysitter. I was with you guys all the time when you went to the banks. Every single time. It wasn't like today where, you know, you would take a picture of your check and it would go into your checking account. No, we were always in the banks. Everything we did, we'd had to go to the bank. No one spoke to my parents about how RSP works. No one spoke to my parents how TFSA works or an education saving plan for their daughter. So I realized, why is it that our families are not being taught these things? And during the time when I was studying in school and I was studying, but I was also working, during that time, unfortunately, my uncle was diagnosed with stage 4 colon cancer. So fast forward, now I'm closer to my last year of university and my uncle gets diagnosed. Like I said before, in my family, we never really used to talk about insurance or investments. We never thought it was right. We didn't understand it, so we never spoke about it. And one of the things that really hit me was when my uncle did pass away, we had no money. So we ended up having to ask friends and families to help us for his funeral. We had no idea that funerals costed so much. And I'm going to tell you what breaks my heart is when I see GoFundMe's, okay? Because I'm going to tell you, as a family who's asking for help, you know, it's not easy. But also the point was, okay, the funeral was covered now. We had amazing family and friends that helped us. But how is my aunt, who was a stay-at-home mom, she's a hairstylist, she worked at home, she had clients here and there, how is she going to help raise 2 children without her husband's income now? So it's not just the funeral cost that matters, it's how are we going to raise these children after? And that's when I realized, okay, I really need to start educating myself, start educating my family, and start educating the community and what we need so that our families are not left in a position where they struggle even more. So can you imagine, you have 2, mom and dad, they're already struggling, and now one is out of the equation. How much more is this one person going to struggle? Okay, I don't believe that, you know, we were meant to be put on this planet to struggle so much. There's resources, there's knowledge. Now it's just a matter of really understanding. So if I could please ask everyone to have a paper, a pen, make some notes. Okay, and like I said, please feel free to ask me any questions that you like. I would love to answer all of them. Okay, so I'm going to share my screen with you. Okay. We are going to be talking about how money works, okay? And during this, I'm going to stick within this, but also branch off, okay? I'm going to be talking about home ownership as well, because I think if it's an opportunity for us, then we should take it, right? But how do we get there? So I want all of us have goals, all of us, you know, and if you don't, I would like for you to write it down. What are some of your financial goals? What would you like for yourself? I need you to start thinking about these things, right? And how can we make that happen? Okay, so just to give you a little bit of a background, I'm going to talk about how do we get in control? How do we get in control of our money? Okay, it's so hard to get the money, to make the money, but it's so easy to spend it. It's so easy for it to get out of our hands. What can we do? Okay, understanding to pay ourselves first. We pay for this bill, Roger's bill, this bill, that bill, all of these bills. Yet the most important bill, which is ourselves, we're not paying for. Okay, and I'm going to tell you why that's so important in a minute. Using time and being consistent, okay? Paying off debt. We've never seen Canadians have so much debt in history. We have so much debt. Every single family outside of a mortgage. Outside of a mortgage. I'm not even talking about the mortgage debt. I'm talking about consumer debt, credit card debts, line of credit debt, I'm hearing people over and over again talking about how they use their credit cards as a way for emergency funds, as a way to use it for an emergency. We need to unlearn these things that society has taught us. A credit card with a 20% interest rate should not be used for an emergency. And again, we're going to be talking about this. Buying the right kind of life insurance. Now, you know, I get many questions asking me the difference between conventional life insurance and halal life insurance, right? What is right? I'm going to be talking about that today. Deferring our taxes. You know, we end up paying a lot of taxes. How do we make it work for us and not work against us? And of course, investing with professional management and understanding that you can do this. Okay, you can get out of debt, you can build your savings, you can get on the path of financial independence. What does financial independence even mean? Okay, there's two parts to it. Financial independence for me, it means that I am not depending on a credit card, or I can depend on myself and my money. And I'm comfortable enough. I'm not talking about being wealthy, rich. I'm just talking about being comfortable. Okay. Another branch, I would say, with financial independence, for me, it would be ending generational curses. Okay. Creating generational wealth so that our children are going to be financially more prepared than we were. Right? That's why, I mean, if you guys, I don't know if most of you are immigrants, if you have children or not, but the point is that for the next generation to be more comfortable than we were. That's why we work hard, right? So let's get started. Paying ourselves first, taking control. Okay, let's talk about this. You got to understand that if every month you're paying Rogers, you're paying the water bill, I don't know, you're paying rent, whatever you're paying for, okay? You're paying for gas, you're paying whatever it is, all these needs. I need you to understand that we have to put something away for ourselves, just in case of an emergency. Now, I'm not going to talk about emergency being a negative thing, okay? It could be an opportunity comes our way. Are you prepared? Are you ready? Most of the time we end up missing out on opportunity because we don't have money. Okay, so you want to put away something, even if that means $25 a month. Okay, now my whole life I've been taught, Melika, save your money, save your money, save your money. I was never taught to invest your money, invest your money, invest your money. Okay, I want us to understand there's a huge difference, okay, between investing and saving our money. Okay, and I'm going to be talking about that later on. Adjusting our priorities. Okay, are you buying coffee every day? Are you buying food outside every day? What are your daily habits? See, one of the things that I do and I provide a complimentary, it's absolutely free, financial needs analysis, where we take a look at your finances and we budget it. Okay, and we take a look at, okay, what are our weekly, our daily, our monthly spending habits? Where can we kind of save, even if it's $2? Can you imagine if you're buying coffee once a day, that's about $2 to $3 every single day. Well, you multiply that by 30, or you multiply that by 20. Let's say you do it Monday to Friday. You know, these things add up. So when people say, I don't know if I have $25 to save, that's why we do the financial needs analysis. When we become more aware, now you're like, oh, I really can save money. And it becomes so exciting. But you got to change the way you think. Okay, we got to understand that you need to want to do better financially. You have to have the intentions of wanting security. Okay, building that. Okay, I know sometimes we think, well, this is what it is, and it doesn't have to be. It doesn't have to be, this is how it is. Struggling is just the way it is. No, we can learn and we can undo certain things that we've been taught. Okay, we can unlearn those things and learn new skills, right? If there are people that are financially successful, that means we're able to too. There is no difference. Okay, But that might mean that we might need to adjust our lifestyle a little bit, even if it means for a short period of time, just to get a jump start. Okay. Sometimes we don't, most of the time, we don't have control over our incomes. Okay. What we get is what we get. That I might not be able to help you control, but I can help you control what are our spending habits, becoming aware of these things. Okay. Maybe we might need to talk about earning additional income. That might be something that we can talk about. And there are ways, but understanding how taxes work too. If you get a second job, what is that going to look like? Okay. Realigning your assets. Okay. Understanding that the low interest rate at the bank, having your money in a high interest rate savings account, making less than 1%, okay, is not going to help us. Why? Because inflation, which means the cost of living, okay? What do I mean by the cost of living? Well, you know, milk, eggs, bread is going up every single year. Clothing, education, gas, all these things are constantly going up in price every single year. My parents could fill up the fridge and freezer 50 years ago with 50, sorry, not 50 years ago, 15 years ago. 15 years ago, they could fill up the fridge and freezer with $50. Today, there's no way. We just went to Costco and came out with $400 or $500, right? We are always spending more. So we have to understand that we cannot afford to be saving our money. You know, I remember being taught, you know, put shoebox money, put it under your mattress. It's safe there. But it's not safe because every year I end up losing money because my dollar last year it doesn't buy the same amount this year. With $10, I could have bought maybe X, Y, and Z last year. This year, I can only buy X and Y because my dollar value has gone down. And every year we'll go through this. You want to make sure that you are avoiding the credit card trap. Actually, before I go there, avoiding the high cost of life insurance. This is another thing that I see. So many people are spending so much money on insurance policies that are not the right kinds of insurances that we need, which I'm going to be talking on. Avoiding the credit trap. Like I said earlier, a credit card has not meant to be for you to use for an emergency. It should be built for you to build credit, right? We're going to be talking about purchasing a home, becoming a home buyer, right? A first-time home buyer, maybe a second, right? But you need to build credit. Credit is everything in Canada. So we need to build that credit. Setting goals and having a plan. Here's the thing. People don't plan to fail, they fail to plan. If we were going to take a road trip and we are going to drive to Ottawa, we want to drive to Montreal, wherever we're going, okay? Wherever you want to go. If we don't have our phones on us, if we don't have a GPS, if we don't have a map, it's going to be very difficult to get there. So what people usually end up doing is they ask other people for opinions. What do you think of this? I'm trying to get to Montreal. What street should I take? Not everybody, if they're not a professional, okay, if they haven't been to that location yet, it's very difficult for them to guide you. If I love my parents, I adore them, and I respect them so much. My parents worked very hard, but I cannot ask them to teach me about how money works because they always struggled to have that money. So it's going to be very difficult for them to teach me. And that's why these calls, these webinars are so important, because we have to learn. Okay, let's talk a little bit deeper into these couple steps. Okay, it's not about what you earn. Okay, it's about what you can keep. That is the main thing. Okay, if you can make $10,000 a year, $20,000 a year, $50,000 a year, $100,000 a year. Okay. You can make $100,000 a year, but if you spend all of it, it means absolutely nothing. Okay. I have clients that make $10,000 a year, and I have clients that make hundreds of thousands of dollars a year. I have them all. Okay. The only thing that, you know, makes a difference is the amount that they save. If you're able to save money, you're doing something right. okay? If you're able to invest that money. Now, what is that investment going to look like? Well, you need to have 2 to 3 accounts, okay? What is that going to look like? You're going to have an emergency fund. Remember, I want to avoid using credit cards, okay? I want to avoid it. The only reason why I want to use a credit card is so that I can build my credit, okay? So I want to make sure that if, God forbid, an emergency was to come out, okay, that I have the right amount of money. If I need money, then I have it, okay? The second thing is short term, okay? Maybe that's buying a car in the future. Maybe that's taking a vacation with your family. You know, I've had clients who've told me, Melika, I haven't traveled for this many years. And I said, okay, is that something that you want to do? Yes. Okay, let's make it possible. Because I remember my parents for the past 27, like however many years we've been in Canada, work, 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 work. Barely took any vacations. I just remember going back home 2 times with my mom. It wasn't until 3 years ago when I took my mom on her first vacation, right? We can't keep going through this cycle, work, 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 work. We can save. We can put something away and we can achieve that. And maybe long term, maybe in a couple years, 5 to 10 years, you want to buy a house. If that's the case, let's work on it. Maybe in 5 to 10 years, you want to start focusing, or maybe in 20 years, 30 years, you want to retire. It is never too early to start saving for retirement, but it's always too late to save for it. Let me tell you that much. Most Canadians, I'm going to tell you the statistic, have less than $30,000 walking into retirement. Now, I want you to think to yourself, okay, how long is $30,000 going to last somebody? Not even a family. How long is it going to last someone to have $30,000 saved for their retirement? It'll last less than a year. What kind of retirement do you want for yourself? You need to start putting money away from now. Okay. Now you want to make sure that when you're doing this, you have your emergency fund, you have your short term, and you have your long term. Okay. You want to use time and you want to be consistent. The sooner you start, the better it is. Okay. And the more consistent you are. I have clients who ask me, Melika, should I just put a lump sum of money every once in a while? No. No, I would rather every month, okay, you put $25, $100, $200, $50, whatever it is, you put every month, as opposed to 1 month I put $100, 5 months later I put 1,000, 2 months later I put another $50. It's way too inconsistent. Think of it like this. If I'm trying to lose weight, or if I'm trying to gain weight, doesn't matter, okay? I need to be consistent with my health goals, okay, with my fitness goals. I can't go to the gym one day and then next week I don't go, and then the next week I go 2 times, and then the next week I go 5 times. It's just very inconsistent. I'm not going to see the results that I want to see. Okay, so you want to make sure that you are investing correctly. Now, one question that I usually get is, okay, Melika, is the investment that you do, is it halal? Is it appropriate? Can I use it? Absolutely. So what's the difference between conventional and halal investments, sorry. So I understand that in the Quran, it says that we are not supposed to get interest, okay? No problem. There are investments that receive capital gains and that receive interest rates. However, there are other investments that you're able to receive profits from the companies. Profits. It's not an interest rate, it is profit. So if that's a concern for you and your family, I absolutely respect that. And I believe that, okay, there are funds that are made for that purpose. Okay, there are ethical investments that you can use that it's just focusing on the profit. Okay, So just to make that clear, if anybody has any further questions regarding that, I would be more than happy to explain that. Okay, so I don't want you to avoid having an education saving plan for your children, having a tax-free savings account for yourself, or an RRSP, or maybe if you know somebody with a child, or there's an adult with a disability, they should be able to get a disability saving plan, right? I don't want you to not have that because of that, because there are other ways, there are proper ways to invest if those are your concerns. Okay, so this is why this is an important conversation to have, right? And with an RDSP, the government is matching you. The government is putting money, that is your child's money. It's crazy because when I was studying psychology, I saw so many families, they didn't know what an RDSP was. And more so today, we are seeing so many people struggling with depression, anxiety, all these things, and yet they don't know that they're eligible for this. So keep that in mind. If there's anybody that you may know, I'm going to put my information in the chat so you can have that for sure. Okay, an education saving plan. Okay, again, the government is putting money. At the end of the day, if your child decides that he or she does not want to take classes, they don't want to go to school, at least you invested money. They can use that money and purchase a home. They can use that money and start a business. You want to be able to give your children opportunity and choices. Okay? Because I understand, and it's so worth it to do this, because I understand that right now making minimum wage is not enough for us. It's really not enough. Children, young adults that are in their 20s making $14 an hour, $15 an hour, $16 an hour, we're still struggling. It is not enough. So if we can go back, you have younger children, please put something away for them so that by the time they can have options for themselves. We work so hard, we need to create options for ourselves because it's very difficult. Society is not giving us enough options. Okay? So we got to create them for ourselves. That's why I mean we got to be in control. So the sooner you do this, the better it is for you. Why? Because things compound. As we're investing in compounds, how can something work against us or for us? So for those investments that are receiving interest rates, okay, I'm going to teach you a rule. It's called Rule 72, okay? And this rule will teach you how interest rates can work for you, but they can also work against you. Now, this rule was created by Albert Einstein. I didn't come up with this. I wish I was smart enough to come up with it, but I didn't, okay? Albert Einstein came up with this rule, which blows my mind. And I say that for a reason, because we were never taught this in school, and we are never going to be taught this in school, okay? So it's so important for us to understand this. Now, this is a time where if you guys can take your pens and paper and write down 72, okay? That is your constant number. It does not change. So let's say you're investing, you have a tax-free savings account and you go to the bank, and that day they're very generous and they give you 3% interest on your money, okay? I want you to take the number 72 and divide it by 3, okay? If you divide that by 3, it'll give you 24, the number 24. What that means is it'll take 24 years for your money to double. So by the time, let's say we say, you know what, I got an inheritance, or I saved some money. I have $10,000. $10,000, I put that away. In 24 years, my money will turn into 20,000. My 10,000 will turn into 20,000. Are we happy? No, we shouldn't be after understanding this rule. So when our money is in a high interest rate savings at the bank and it's making 0.05%, at this point, we should be furious. Why? Because if you take 72 and you divide it by 0.05, or let's say 1%, okay, if they're giving us 1%, what's happening now is that it'll take 72 years for our money to double. We don't have that much time, okay? I mean, God willing, we stay for another 72 years, but even at that point, what can we do with it? Okay, now I want you to understand, okay, the same situation, the same scenario, $10,000. Okay, now we invest that in something that provides 6%, whether it's interest rate or whether it's profits. Okay, that's up to you to decide. Okay, you take 72 and you divide it by 6. Okay, that now gives you 12. That means every 12 years, your money will be doubling. Now, I want you to see this important part to this. I've only doubled the interest rate, so from 3 to 6, but I've quadrupled the final amount. We went from, in 48 years, sorry, we went from having $40,000 versus $160,000. Now, let's say we were investing at 12%, okay? Let's take 72 and divide it by 12. That will give you 6. Now, that means every 6 years, our money is doubling. So you take a look at that. I haven't put a penny in, but in 48 years, I would have $2.5 million. And this is how the wealthy keep getting wealthy, because someone is teaching them this rule. Let's say 2 of us, okay, myself, and let's say someone by the name of Rachel, okay? Rachel and I are going to be investing $100 a month. Rachel is investing at 4.5%. I'm going to be investing at 9%, okay? You take a look at this graph over to the right, okay? We're putting the same $100, we're starting today. The same time, same consistency, everything's the same, okay? My money after 45 years will turn into $175,000. Sorry, her money will turn into $175,000 because she's investing at 4.5%. Because I'm investing at 9%, double, I now have 6 times more than what she has. I have $746,000. That is a huge difference. So I encourage you, even if that means $25 a month, get something started, please. If you have a newborn baby, right, and you want to start an RESP for them, 18 years is a long time. You can double their money by the time they go to school if it's invested properly. Now, some people might ask, where do I find this 12%? As a financial coach and as a financial broker, I work directly with financial firms, with the fund companies, okay? And we're going to be talking about that a little bit further. You know, what's the difference between investing at the bank and investing with, for example, for someone like me to manage that? Well, I have more leeway room. Why? Because at the bank, they're taught, unless someone is walking into the bank with $250,000, with $250,000 or more, they will talk to somebody with that amount of money and they'll help them invest their money at a little bit of a higher interest rate. Yet if you go to the bank with $100, $1,000, $20,000, you are not going to be receiving the same type of opportunity, choices. Okay, they are not going to put somebody with $5,000 in an investment that makes 9%, but they will sell a credit card for 20% interest. So just like how it works for investments, it works the same for credit cards. And this is why debt keeps piling up. Now I want you to take 72, the average credit card is the average credit card's interest rate is 20%, 19.99. Take 72 divided by 19.99. It gives you about 3.6. That means every 3.6 years, your money's going to double. If you're not paying your credit card properly, it'll double and double and double and double. So we really want to be aware of this so we don't get into that debt trap that I'm going to be talking about. So there is power in investing, but you got to stay consistent, okay? And you got to start as soon as possible. Paying off debt. You know, I have conversations all the time where it's like, Melika, my husband and I don't know who, he keeps saying, pay this off. I keep saying, pay that off. Or a lot of the times, you know, Melika, I'm stuck. I'm paying a little bit here. I'm paying a little bit here. I pay a little bit here, but I'm not even like putting a dent on my debt. There's no difference. Melika, I keep paying, and I still have debt. What do I do? Okay. At this point, you know, we constantly keep paying, but we're not seeing the results. Why is that? Because first of all, we got to understand how debt works. Okay. What's the difference between revolving debt and fixed debt? Okay. Revolving debt means basically a credit card. Every month, 19.99% is being added. Okay. Every time we use our credit card, interest rate is going on top of it. So for example, if I pay $10 for this pen, okay, if I pay $10, I'm really paying more for this if I don't pay off my credit card right away. If I use my credit card to pay for this, if I don't pay it off, I ended up paying much more because of the interest rate that's been added on top of it, okay? Whereas a fixed debt, for example, financing a car. A lot of people ask me, Melika, should I finance a car? If we can avoid it, let's avoid it. Even though it's fixed, okay, we should not finance a car. Why? Because a car is a depreciating vehicle, okay? So when we take the car out of the lot, we bought it, we got the keys, we left the dealership, it's already dropped in price. So if you can buy your car in cash or lease your car, it's a lot better than financing it. However, just to speak about the difference between revolving and fixed debt means that it's already been created. So let's say you bought a car, okay? And they say the interest rate is 5.6%. Okay, the car's worth $20,000. They've already included that 5.6% into your monthly payments, okay? So into your monthly payments. So it's stuck and they give you a term. So they say, okay, pay this off in 52 weeks, pay this off in three years, pay this off in 7 years. Whatever it is, it's already fixed, okay? So the difference between revolving and fixed is revolving, just like the way it sounds. It's revolving, it just keeps being added on. So if we're not paying these credit cards correctly, it's going to really take over us. Okay. Now, remember when I was saying, you know, my clients are constantly saying, Melika, I pay this, I pay this, I pay this, I pay this, but I don't see a dent. It's still there. What do I do? Well, here's what you're going to do. You got to take a look at your debt. Okay. Look at your credit card, your line of credit, everything. Okay. I usually ask people, which one do you pay first? Well, it's either I get all of them or I get the one with the highest interest rate. Both are wrong. I don't care about the interest rate. I care about the amount. You have to start paying your debt. It's called debt stacking, the lowest amount. So let's say you have a credit card that's $1,000 and you have a credit card that's $3,000. You have another credit card with $5,000. Okay. I don't care about the interest rates. I'm going to start paying off the $1,000 one first. Melika, I have extra $100. No problem. You're going to take that $100 and you're going to put that into your credit card. $50, whatever it is. Let's start paying off this $1,000 credit card first. Once we got rid of that one, now we take that $100 and the $50 that we were original paying for that credit card, take 150, add that towards the next debt, the $3,000 one. We now are starting to pay off this debt. Then we take that money. So we take the $150. Let's say you were paying $100 for this one. So $250 now. You got rid of that. You take $250. Now you're going to invest it in the last one, your $5,000 credit card, maybe your $10,000 line of credit. Doesn't matter. You're going to take that and you're going to start investing in this one. This is going to help you get out of debt a lot sooner than putting $20 extra here, $20 extra here, $50 extra here. Imagine if we started from the $10,000 and we're paying minimum payments for everyone. This is going to take so long. So I would rather get rid of this, get rid of this, get rid of this. Now put that money and start getting rid of the big one, right? So you want to start monitoring your debt. You want to start creating a proper system. You got to remember, money is like a game of chess. You can't use your king and queen and your soldier at the beginning. You can't put it all it doesn't make sense. There's a system, there's strategies that you got to learn, you got to play, okay? Now, buying the right kind of life insurance. This is a very important topic, okay? I'm going to tell you, like I said at the beginning of the call, my family didn't talk about life insurance. We didn't understand it. We didn't know if it was right. So no one spoke about it, okay? It wasn't in my culture, okay? However, one thing I will tell you is no matter what culture, what background you come from, death is hard, okay? Paying for funeral is hard. Raising children without a second income is hard. We need to avoid that. Like I said, we have a responsibility, especially if we have children. There's a responsibility, okay? So what is the difference between halal and conventional life insurance? What's right and what's wrong, okay? We got to first understand what is the purpose of life insurance. Well, a lot of the times we have home insurance, we have car insurance, and then we have our family. Some people even get jewelry insurance. I've seen it all. When we get a new phone, when we get a new laptop, we get warranty for it, right? Yet all of these things can be replaced. Your car can be replaced. Your house, it'll be difficult, but the things in your house can still be replaced. Your jewelry, it can be replaced. Your phone, it can be replaced. What about you? We are not replaceable. If my income, let's say for example, I'm bringing home $50,000 a year, okay? I bring home 20,000, I bring home 100,000, it doesn't matter. My income is used to pay for bills, is used for I'm responsible. If God forbid I'm not here, those bills are still going to be there. Who's going to pay for them? We need to understand the importance. If you are married, okay, maybe you don't have children, okay, but you're married. If God forbid something was to happen, your spouse is responsible for your debt, right? And of course, funeral costs, that's for sure obvious, right? Who should buy it? Everybody. I got mine when I was 24 years old. I don't have children and I'm not married. Why did I get it? Because I don't want my parents to get a line of credit to bury their child. I don't want my parents to ask the community to help them to bury their child. That's very kind, but if I can avoid that with $30, $40, $50, whatever a month, I'm going to avoid it. Also, I have responsibilities. I pay for bills. Those bills are still going to be around even if I'm not there. So it's just a matter of becoming responsible and taking that responsibility. What should you buy? What kind of insurance do you need? Okay, let's talk about it. Well, there's two kinds, but before I talk about that, let's talk about the theory of decreasing responsibility, okay? What that means is when we are young, we have young children, we have high debt, some of us have a mortgage. So the loss of an income is going to be very devastating because let's say I had a 5-year-old child. My 5-year-old child cannot go to work and make money if, God forbid, their mother is not here. So when our children are young, we are responsible to have something put away for them. When we are older and our children are adults now, our need for insurance becomes less because our children, like I said, have grown up, our debt has gone down, our mortgages are usually paid off. And now what's important is retirement income. I know we are in a, sometimes I know my culture is like this. What we end up doing is we ask our children to help us. Okay. I want to try to avoid that. I'm okay to help support my parents. I love them for it. But I will tell you that my parents didn't work this hard to come to the point where they need their child to help them out. Nobody really wants that. Okay. We should be responsible for our retirement. And at this point, CPP and OAS is not enough to survive. What the government provides us great is a bonus, but we still need to have something for ourselves. So this point, what we need to focus on is having some money put away. That's why having just an insurance policy is not enough. You need to have insurance, but you also need to make sure that you are saving appropriately, effectively. However, the issue with these life insurances is that they put them together. They should not be together. So those are the ones that we are not supposed to have. So if anybody is on ODSP or OW, okay, we cannot have those, okay, because these ones are attached to an investment that pays those interests that, you know, and we shouldn't have them. Because at the end of the day, even if you're not on OW or you're not on ODSP, okay, why is it not right to have them be together? We should have them, but they shouldn't be attached to another. Because at the end, if God forbid something was to happen, the insurance gets paid out to your family, but the investment is given to the company. Both of them are not given to the families. So let me ask you something. I have two lip glosses, two lipsticks, okay? I'm paying for both, but I can only use one. Is that fair? But I'm paying for both. Every month I pay for them, but I'm only allowed to use one. And that's what a cash surrender value is. Unless I take it out as a policy loan. Now, again, let me ask you something. If you were putting money away, does it make sense to borrow your own money, to take a loan and pay 6 to 8% interest rate on your own money? If I'm going too fast or if you have any questions, please let me know. Okay. Mark, would you like me to read some of the questions? Or Soraya, do you want me to read some of the questions right now or leave it to the end?
Leave it until 7:15. There's only one question in the queue right now.
Okay, perfect. Okay. So you want to
are you finished with your presentation?
Pardon? No.
You are done with your presentation?
No, not yet. I just wanted to know if anybody had any questions. Not yet.
I was burning to ask you a question. I'm just holding myself.
Okay. Up to you. If you want to leave it for 7:15, ask me.
Sorry, go ahead.
If you want to ask me now, go for it. Or if you want to leave it till 7:15, I can answer it there.
Yeah, I think we could do at the end.
Okay, perfect.
Taking notes, so I will ask you after.
Beautiful. Okay, so let's keep going.
Yeah.
So you want to get term insurance, okay, which has lower premiums. It's less expensive, but it's not attached to anything. It's pure halal insurance, okay? And there's, like I said, it's just That's what it is. And you want to make sure that when you're getting something, maybe have something covering you for terminal illness, not critical illness. I see a lot of families having critical illness, disability, insurance, all these things, which most of them can be avoided. And as long as we are saving money and we have control of our money, like I said at the beginning, that's what's the most important thing. Okay. So if you do have more questions, I'll answer, but I will be talking about this during the financial needs analysis as well. Okay, so not going to go through that. Let's go through RRSPs and TFSAs. Okay, I'm going to keep it simple so that it's easily understood. Okay, now both of these have a limit. Okay, let's start with an RRSP. Now I want to talk to you guys about home ownership. An RRSP is a great tool to use as a first-time home buyer. Canadians are allowed to use up to $35,000 for their home. Okay. Now, with this, you put money away. Now, everybody has it because of their tax bracket, because of the amount of money they made. Every year you get a different amount. How do we find out how much this is? Well, you get it on your notice of assessment. So after you file your taxes every year, you can see that. Okay. So there's also a strategy. It's not just put $25 a month, put $100 a month. No, you need to understand what can benefit you. How can it benefit you? So everybody's going to look different. Unfortunately, at the banks, they don't, it's kind of like a one size fits all. But finances is not a one size fits all. Everybody is different. So that's why you need a financial plan for you and your family. Okay. Now, what does this mean? You can use an RSP in two ways. I've heard a lot of people saying, I don't think RSPs work. I don't believe in them. It always makes me laugh because it's number one, it's not something we should believe or not believe. Okay. It's not a religion. But I understand why people say that because they weren't taught how it's used. When they end up using it, it kind of backfires. What ends up happening is when you put money in an RSP, it lowers your tax bracket. What's great about this is that your child tax benefit will go up. Your tax income, like when you get your tax refund, goes up as well. You can also invest this money. Now, what happens if I take this money out? You're going to get taxed. You're going to get taxed. So this money is not for an emergency fund. You don't put money in to take it out. You put money in to use it for two things. Number one, home, your first-time home buyers. Number two, you use it for retirement. Why? Because when I'm young, my income is usually higher. So it benefits me in terms of my taxes right now because I'll get more tax refund. In the future, in my 60s, my bracket will go down because my income will go down. Right? So in that situation, now when I take money out, I'm being taxed less. So I actually made money. And if you leave it for 20 years, 10 years, 15 years, 30 years, okay, obviously the younger you start, the better it is, okay? If you let this money grow, remember we did compound interest, this money is going to compound, okay? That's how an RSP works, okay? In a very simple way. So don't expect to use it and then take money out right away because it's not going to help. Because if you use it, it's going to lower your income. If you take it out, it's going to increase your income. We don't want that, okay? How about a tax-free savings account? Well, just like what it says, a TFSA is tax-free. When I put money in, I pay no taxes, I get no taxes. When I take money out, I pay no taxes, I get no taxes. Okay. So at this point, I can use my limit. So depending on how long you've been in Canada, depending on your age, everybody will have a limit. If you've been here for many years and you're over the age of 27, 28, you should be able to invest about $69,000. Okay. Because every year the government allows us to put another $5,000 or $6,000 onto our TFSAs. Okay. So next year, it'll be a little bit more. The year after, a little bit more, depending on what the government decides. I would highly recommend that you use this. Okay, so this is the one that I use the most, whether it's for emergencies or it's used for long term. Okay. So you want to become an owner, not a loaner. What's happening at the banks, okay, is our money is at the banks, right? When you think about it, I've used my phone as Apple Pay, okay? I've tapped my card, I've done e-transfers, okay? I don't really use cash, I don't really go to the bank anymore. How is it that my money can be transferred so easily? Because our money is not in the bank anymore. That's not the 1800s where our money used to be in the bank. It is not there anymore, okay? Our money is being invested every single day. The banks are using our money and investing that money in the global economy. Pandemic or no pandemic, recession or no recession, the global economy makes anywhere from 20 to 30%. Now think about it. How much is your money making at the bank? What is your high interest savings account? What is your RESP? What is your child's RDSP? What is your TFSA doing at the bank? Usually is under 2%. So if I make 1% and the bank made 20%, they made 19% on my money because my money is being invested. So why I encourage you to understand your products, understand the services that you have, okay? Even having a second opinion, okay? Because what I do is I review everything with you. So I review your finances and I take a look, okay, what are you investing in? Like I said, if you're making less than 3.6%, because that's the cost of living going up every year, that's inflation. If you're investing anything less than 3%, you have lost money. You have lost value, lost money value. Some people say to me, Melika, I'm conservative. I don't like high risk. I don't want to lose money. You're losing money every day when you're not properly investing. Every day you're losing money. Every day you work hard, you make that money, you make that dollar, you make that dollar, you make that dollar. Next year, that dollar is going to be worth less. So you have to make sure all the hard work that you're doing, it's at least growing, okay? Rate of return is key. Now I'm going to talk about this. Ines, are you on the call? Are you still there? I don't know if you're able to unmute yourself, but I'm going to talk to you guys about the difference, okay? I just recently had a client, okay, who showed me, I'm going to stop my screen and I'm going to share with you some personal stuff, okay? So I had a client who started investing with me because what we saw with her investments is that for 18 years, her money was in Manulife. Okay, we all know Manulife, the green one. Okay, we all know Manulife. She had a Lira. This is like a kind of like a locked-in. This is a locked-in retirement saving plan. She had about $15,000 in there. Sorry, 9,000 to start, but this was like 15, 16 years ago. Okay. Oh, perfect. Ines is here. So Ines knows about this, and we were kind of going through this together. She had $9,000 in Manulife. 16 years later, her $9,000 turned into $15,000. So after 16 years, she made $6,000. After 16 years. Absolutely ridiculous. Okay. Not only did she lose money, but she really lost money. Now, what do I mean by that? If she made less than 2%, okay? Less than 2%, we calculated it. If she had properly invested this money, let's say she was, like I said, we were talking about the profits, right? If she made 9% on this money, she would have had over $45,000 in this account. Let me say that again. She had $15,000 after 16 years. She would have had close to $45,000 if she had properly invested that money. This was very heartbreaking for me. Because who made the difference between 15,000 and 45,000? Who made the difference? Manulife did. Manulife took that money. I had a client that was investing with TD Bank, Scotiabank, and they were investing, again, 3%, just under 3%. We did the calculations. They lost so much money, not just in terms of the dollar value, but in terms of what they should have made if they properly invested. So these things are so crucial to understand. So I don't care if somebody has $25 or $200,000. It doesn't matter. We all deserve to properly invest our money. Now I know with some, if somebody is on OW or ODSP, I know there's some limitations. Of course, there's some limitations, but there's always ways around it. I have many clients that are on OW and are on ODSP. We just have to know what's available to us. So before I get you guys into the Q&A, okay, because I would love to hear your questions, I want to make sure that everybody knows. I'm going to put in my information right now, okay? I'm going to put my number and my Instagram if you guys want to contact me, and my email, okay? So my name is Melika Dolaty, okay? If you would like to contact me, you want to receive a complimentary, which means free, financial needs analysis, please let me know. If you already have products, you have savings, you have investments, you have all these things, let's just look at it and see a second opinion. And I'm going to tell you why. Because if something is not broken, we don't need to fix it. But like I said, from the beginning till now, you need to understand your options and you need to understand your choices. Because in return, what that will do is it'll give your children more options and more choices. Right? If my parents were able, God bless them, they worked so hard, but I imagine when I was 20 years old, when I turned 20 or 18 years old, they were able to give me $10,000. They were able to give me $20,000. They couldn't because they didn't know. But if they had started since they came to Canada when I was one year old, and they started for 20 years, they just put in $50, $25 from the child tax benefit, whatever, okay? I would have had a good lump sum of money. So whether your child is 1, 5, 10, 20, I don't care. Start something for them. Okay, let's have the next generation be in a better position than us. Okay, so I'm gonna, as I put my information down here, if you guys have any questions, please go ahead and ask. And I'm gonna read. Mark, are you gonna read the questions or am I?
All right, so I have a question from audience member Mila. And the question is, if I start a RESP for my kids and they don't end up going to school and I want to give them money, would I get taxed for taking it out and giving it to them instead?
So perfect question. Like I said earlier, yes, if you open the RESP, here's the thing. What's the best case scenario and worst case scenario? Best case scenario, they end up going to school, okay? And they use the grants and the bonds from the government. The money has grown in interest or in profit, whatever you believe in, okay? It's grown and they use both and the money that you have put in, right? So so the money you put in, the government's grants and the bonds that they receive and the profit that the investment has made. So they end up using all of that for school. If they don't end up using it, what they don't get is they don't get the grants or bond, but they get the money that you've put in and they get the profit that it's made throughout that time. So it's okay if the child doesn't go to school, you still have that money and you can take it out because you as a parent are the owner of that account. So you can take out that money and use that money for whatever you want. You're okay to use it. The difference between the banks and myself is that at the bank, you can, if let's say they go to school, they're limited as to how much they can take out. Most of the time is usually 25% every year they can take out if they're in a 4-year university course. However, with me, you have access to take out whatever you want from the first year. Great question.
Let's go to Soraya. I remember Soraya had a question.
So yeah, so you mentioned what is the difference between, and actually I want to say thank you first of all. It was yeah, nobody talks about in the house when we grow up about money. It's so true. I don't know why, but it's interesting. I was reflecting on what you said, and it's so true that nobody's talking about it.
Yeah.
Yeah, yeah. The question that I have is, let's say, what is the different fixed rates and yeah, what is the difference of fixed rate and fixed interest?
So fixed or revolving?
Yes.
Okay. So revolving, so let's say we use a credit card and we spend $100.
Right now, because of COVID, whatever that the bank is being so generous, the interest rate is 1 point whatever that is out there right now.
Okay.
Yeah, so go ahead.
Okay, so you know that the bank, let's say it's a GIC, that's a fixed interest that the bank is offering right now. So you're guaranteed to make 1.5%. That's not going to change. It's not going to go up and it's not going to go down. A lot of people like it. They like the sound of it because they think, oh, good, I'm not going to lose money. However, like I said,
let's say, sorry, on that, yeah, if I may add, let's say you buy a house, okay? What does that means that people get when they buy the house, they said it's fixed rate, or
okay,
it's not, it's open.
Fixed or variable for a house. Okay, this is a little bit of a different topic, but I'm going to touch on it right now. If you get a mortgage and you get a fixed mortgage, this rate, let's say you get 2.3% on your mortgage, okay? That's already been included in your monthly payment. Okay, so every month your mortgage, let's say you pay $2,000 a month for your mortgage, okay, at a rate of 2.3%. So if the market, because mortgage rates go up and down, correct? Mortgage rates constantly going up and down. If you have a fixed rate, whether the mortgage rates go down or up, it will always say 2.3%. But if you get a variable, like similar to the revolving, like I said, if you get a variable rate on your mortgage, it depends on the market. This is good and it could be bad, because if the mortgage rates go down, you won. But if they go up, you got to pay more on your mortgage. So every year it depends on that. I usually suggest you get a fixed mortgage rate, okay? Because the term is only 5 years anyways. You get to renew it. You're not stuck with it for 25 years of your mortgage, okay? Because you never know, if it goes high, it's gonna go high. If it goes down, it'll go down a little bit, but not too much, right? So you're better off getting a mortgage that's a fixed rate. Great question.
Right, so our next question is it's coming from Slav. Slav, are you would you like to ask your question directly to Melika? All right, so I'm just going to read off the chat here, but the question was, for people investing long term, do you recommend a 3-fund portfolio with an asset allocation like 48% total stock market, 32% total international stock, and 20% total bond market?
Can you say that first part one more time, please?
For people investing long term, do you recommend a 3-fund portfolio?
Okay, so in terms, okay, so where are we? So Slav, if you can be a little bit more specific, where are we investing this? Okay, when you say something like 20, 40%, okay, the only thing I would consider is, even if it is long term, what is the safety net behind it? Are there professional management? Is it being professionally managed? Okay. High interest rates are great. However, you want to make sure. So what I do for my clients is I make sure I get those high interest rates, but I keep it at low risk. So the two things that I focus on here is paying the least amount of taxes and having the lowest amount of risk. Is that what you're getting from this? Because even if it's long-term, I love the fact that you said that. Yes, long-term, we have more room to take a little bit more risk, right? Because we're not trying to take the money. However, I'm going to tell you within the next 10 to 15 years, our economy is going to look so different than it ever has. Okay. So I don't personally suggest that. Okay. Because I'm someone who wants to, I like high interest. I'm an aggressive investor, but I still want a safety net. So if that means my money can go up at 40%, does that mean it can also go down 40%? I'm not a position where I can afford to lose that much. Are you in a position that can afford it? So those are the questions that I would ask you first before I recommend that.
Can you hear me okay?
Yeah. Hi, how are you?
Okay. Yeah, sorry, I wasn't able to unmute myself.
That's okay.
Yeah, when I was mentioning the percentages, I was just doing some reading into actually like investing long term into stuff like index funds. Those percentages were just the allocation of assets.
Like they give you a point, like whatever that time that you use, you advise to collect those or accumulate those points and use them whatever time you want or whatever it is.
Use it up. If you can get a credit card where you don't have to pay for it yearly, but they give you like points, yeah, use it. Absolutely. That's okay. That's fine. That's fine to use. That's fine to use. Just make sure if you're going to be using credit cards and they're going to be charging you 19%, make sure your savings and your investments are not making 1%. Okay? Because if you have savings making 1% and you're paying 20% interest on these cards, you're losing both sides. You want to start growing. You don't want to keep losing. That's why we're always 10 steps behind. Right? There was any.
Actually, let me get back to Slav. I think you were, and then we got shut down.
You were speaking about index funds.
Right. Let me here.
So are you managing it yourself or is somebody managing it for you?
I was just doing some research into potentially managing it myself.
Okay.
And one thing I read about is people advise for like largely passive investors, which I probably would be, the 3-fund portfolio. So splitting the assets kind of like, let's say 48% in like a total stock market, 32% in international stocks, and then 20% in bond stocks. Bonds, sorry. Is that like a fairly, I guess nominal, safe investment and a way to like passively leverage how much the market generates over a long term?
Well, seeing what's been happening right now and the volatility of the market, what does volatility mean? For those of you who may not know, volatility means the market going up and down. Okay. Gas prices going up, going down, going up, going down. Most people, Slav, I don't know your financial situation. We would have to sit down and do a financial needs analysis. And I could tell you, I recommend this. But what happens is that most of us can't afford to lose money. What I would really recommend is, yes, invest your money, okay? Diversify your money, okay? But you got to understand the dollar cost averaging. What are the stocks being invested at? For example, Tesla, Elon Musk smoked a joint on a podcast and he lost $1 billion on his stocks. So no, I don't usually encourage that because most of us are not financially equipped or educated enough to manage our own money. I personally prefer having fund managers looking after that, taking over those investments, because I'll tell you, for them, they are financially, there's a big financial incentive for our money to grow. Why? Because as the investments, their stocks grow, their mutual funds grow, their funds grow, they get more bonuses at the end of the year. So I prefer having, for the majority of people, I prefer having clients have a little bit more of a safety blanket, okay? Because most of us don't really know when's the right time to pull our money out, when's the best time to invest, okay? So because of that, if we don't have, I mean, researching, Googling is fine, but the thing is we can't self-diagnose. So in order for it to make sure that it's safe, right? Can you afford, if you put $20,000, can you afford to lose 15? So those are questions that I would ask myself. I love that question. For me to recommend it for you, I would have to know a little bit more about your finance. Okay, I'm gonna put my number again in there for those of you who maybe haven't gotten, I didn't get a chance to write it down. Precious had a question.
Actually, let me get you to Donna. Donna, I'm gonna ask you to unmute your mic.
Hi, can you hear me?
Yes.
Donna.
Thanks for this webinar. I think Precious also had kind of the same question as me. So I apologize in advance if like the answers to my questions are a bit obvious.
No, no problem. Ask me. I want this to be clear. Please go for it. Feel comfortable.
So I have 3 questions. The first one is about credit score, and I'm wondering if your credit score can be impacted even if I don't have a credit card. And is there any harm in getting a credit card late in life?
How old are you, if you don't mind me asking?
I'm in my mid-20s.
Okay, perfect. You don't have a credit card right now?
No.
Okay, I would suggest getting one. Okay, even if it's $1,000, just don't abuse it. Because when I was 18 years old, I ended up having 3 credit cards. I abused it. By the time I was 24, I had $45,000 of debt with OSAP, credit cards, line of credit. I did it all. It was very, very, I didn't know better, so I couldn't do it better. So I ended up having so much debt. So if you should have a credit card, but only for the intentions of building credit. Okay, like I said, in this country, you want to buy a house, you want to progress, even if you want to rent or lease a place, you need credit. They check your credit now. So we have no choice but to increase our credit. So yes, you absolutely need it. In terms of getting cash back, I was looking at the question, I don't suggest using cash back because they charge too much interest on that. Don't get cash back. But the question is, in order to rebuild your credit, if you don't have one by now, you need to go and get a credit card. Okay. I highly suggest it, but when I use it, you need to pay it off right away. That's it. That's the rule. Okay. I don't sell credit cards, by the way. I just want to be clear for everybody on this call. I don't sell credit cards. I'm not going to do that. You can go to the bank or wherever, Walmart, whatever, and get a credit card that suits your needs. Try to have one that you don't have to pay for yearly. If you're someone that loves to travel all the time, maybe get one that's an arrow point, but whatever, it doesn't matter. The point is you need to start building your credit. Yes, you need to get a credit card. Later in life, if you want to get a line of credit or something, they're going to ask you, what have you done this whole time?
Okay.
Okay.
Can you actually get a credit score if you only have a debit card at the moment? Like you've never had a
no point of doing that. What's the point?
I'm wondering if there is a credit score, if they actually do.
Well, there is, but it's not really reliable because you have nothing, you have no history to show for it. Having a debit card doesn't show history.
Okay.
So a lot of people, oh, let me just say this because I get a lot of people, I financed a car to increase my credit score. Wrong. No, it doesn't work. It doesn't work. You don't do that. You don't finance a car to increase your credit score because it's a depreciating asset. Liability. It's not an asset, it's a liability. Okay. So because it's not growing, it doesn't really help with our credit score. It's just a trap. Okay. Just get a credit card, buy your car in cash or lease your cars. Do not finance it.
Okay. And my last question is, I was looking into life insurance before and I do want to purchase it. But if I want to add my mom, who's on ODSP, as my dependent, would that kind of disrupt her like ODSP income?
No.
Since you mentioned that it's considered investment.
No, there, like I said, I don't do an insurance with an investment. Those insurances do not work. So if somebody's talking to you about an insurance with an investment portion, run far, far away from it. No, do not get an insurance policy that does both. And if you want to get an insurance for your mom, depending on, so this is something you can message me and we can talk about it, because what I would ask is, what is her disability? So if you want to get something, her disability matters at this point. That's her insurability. You should get insurance on her, but we have to see if she's insurable.
Oh,
Okay.
Okay.
Okay. So depending on what it is, we have to see if somebody is insurable or not. That's why I suggest everybody getting it as young as possible, as soon as possible, because we don't even know if, God forbid, next year we're ill or we're sick or something happens, we're not guaranteed to be able to get life insurance. So don't wait too long, because sometimes it's never too early to get it, but sometimes it becomes too late. So I'm so glad that you understand the importance of it. And I highly do suggest you get something. Like I said, I was 24 when I got mine. It doesn't have to be expensive. Okay. It just has to be something that we can have, and that takes a little bit of that stress off of our shoulders.
Okay. Thank you so much.
My pleasure.
All right, Melika, I have Precious. Precious, I'm just gonna ask for you to turn on your mic. Give me 1 second here. There you go.
Okay, so I just wanted to ask, can you explain to me the process of cashback MasterCards? Because I heard that those are best for students, but I don't really understand how I feel like there must be some kind of benefit of the bank, but I don't understand how, if it's a cashback credit card, the bank is also getting their profit. Like, it just doesn't make complete sense to me.
Oh, it doesn't make sense at all, my love. I don't know who's suggesting these things. Like, these things blow my mind.
Cool.
Absolutely not a good idea. That's how we end up falling into these traps. How do you think I got into $45,000 of debt being 24 years old? Because I didn't know better. Because I ended up listening to these advice. The banks want us to get into debt. Because what happens is they get passive income, because every month we got to pay for these things back, right? Cashback is not the way. You need to create your own fund, your own emergency saving. You need to have your own long-term savings, okay? I'm just going to say right off the bat, no to cashback, because if, let's say I take $100 and I have to pay interest on that, my $100 might end up becoming $200. So this is worth $100, okay? But I'm going to end up paying $200 for it because of the interest. So anything that has interest, no, you should never use credit cards and take it as a cashback. You need to create your own cashback with your own control.
Okay, thank you.
That blows my pleasure, but that blows my mind that people are suggesting these things. Oh my goodness. Please don't do it. Please don't do it. It doesn't help. The banks make a lot of money doing this, because like I said, something that's $100 will end up making you spend $200 for. Does that make sense?
Can I, is there anybody else asking, or I have a question as well?
Go for it.
Mark?
No, I think we're good. Go for it.
Yes, sir.
Okay, I could go ahead and ask.
Yes, go ahead.
So is there such thing as halal home buying?
Is there such thing as what?
Yeah. Halal home buying investment, home buying.
Home buying is a little bit different. I have Muslim clients that purchase the home. because they believe that the home goes up in profit. There's not really interest that goes on it. It's just,
Yeah.
it goes
Home.
up. It's home equity, okay? It's a little bit different than investing. Like investing, I can make sure that it's profit, okay? Home ownership, I believe it's halal, but it depends on the person because you're getting equity on it. It's not, there's no interest rate. You're paying interest on the mortgage, but it's not, you're getting interest on the house. It's going in profit. So for example, look at it like this. When you get a raise from your boss next year, that's profit. Every year, because the cost of living goes up, let's say next year, minimum wage goes up to $15, goes up to $16. It's the same thing for a house. So yes, it's halal, but you know, your beliefs are your beliefs, but it is halal because it's going up in profit. Okay.
There's no other option.
Absolutely. So let's say, you know, 10 years ago, minimum wage was $10, $11. Today it's more. Everything's gonna go up in price. We live in this is 2020, right? Everything's going up in price. It's not the same as 1900s or 1800s. Things were going up slower, whereas now things are going a lot faster. So we end up losing so much more when we're not properly investing. So that's why I said, if we have the knowledge and we do it right, we don't want to lose out on an opportunity because every year it's just going to keep getting worse and worse.
I think we need to have kind of a series of a class. I don't think this will
be enough
justice on this.
I would love to do a class.
Yeah.
Ines knows, you know, Ines knows I teach this all the time.
Yeah.
So I am a financial coach. So just for everybody to know, I'm not an advisor. Okay. I'm not here to sell you a product, shake your hand and tell you, thank you so much. And I'm gone. No, this is my business. I teach financial literacy. Okay. And I coach you. So just like a basketball coach, like a soccer coach, a dance coach, whatever. Okay. A math coach. You know, we're really trying to make sure that we understand what we have. Understanding it, comprehending it. That's the biggest thing. Okay. Financial literacy is a culture. Financial literacy is it's a necessity. It's a necessity now. We cannot afford not to understand. So I would love if you guys have different topics that you want me to, you know, train on. Maybe one time you want me to talk about education saving plan. We can just talk about education saving plan. We can just talk about TFSAs, home ownership. I actually have an amazing friend of mine who's also my business partner. She's a realtor and she can definitely, she's very educated, very kind, and she can definitely talk about home ownership and you can ask her a lot of questions as well. Mark, can you?
Yeah, I think let's connect.
Ines wants to say some stuff.
I think, like Soraya said, we need to do more of this in the community. As you know, it's a multicultural, and it needs a lot of explaining to the members of the community. This is why we do these workshops, in order for residents to understand and have a better feel of it, because a lot of us have as a second language.
Yes.
And a lot of us are understanding in a different way.
Absolutely.
So, and this is why, like I said, this is why we bring these workshops to the communities. So the residents are more, it's educating ourselves.
Absolutely.
And like, even with me, Melika, you know, when you spoke regarding about what happened to me, you saw me, I literally cried. What happened with I
didn't mention it was you. I didn't mention it was you.
No,
so,
but it's okay.
It is Ines. So Ines had an investment where she had her money being invested for many years. I think it was more than 16 years, right?
Yes, I've had it where it was retirement, where I literally cried when Melika looked at my stuff, and I don't even want to get emotional right now, but it is hurtful. It hurts when you trust in somebody that you put your money, you invest your money, and for so many years, it didn't really get nowhere. You know, and I'm not getting any younger, I'm getting older. as you guys are aware, that Canada Pension and No Pension Plan is changing all the time. It's not the same the way it used to be.
Yeah.
And when you do these things, and like Melika says too, we're all working so hard. And I mean, it's from one job to another job to make man's need. But at the same time, it's like, okay, so why didn't this person do this for me the right way? And this is why I've talked to Soraya and Malika and saying we need to bring this to the members of the community because of my experience. And it's so important to bring it to the members of our community for them to learn and know about all this financial stuff.
Yeah, for sure. For sure. And now Ines has been investing with me properly. Everything has been growing more than it did for her throughout the amount of years that she had it with Manulife, which was actually over 16 years. You said, was it as long as Julito was born?
Yeah, he's 24.
So you had it there for 20 years, 21 years.
Yes.
Yeah, if he's 24, this was 3 years ago. So 21 years, actually, not 16 years. So from 9,000 to 15,000 in 21 years. Whereas now it's gone from 15,000 to 20,000, 22,000 in just a short period of time, 3 years. So how are we investing our money? This is crucial. So we cannot afford to lose the money, right? We cannot afford to be paying all these high interest, all these high insurance rates. You know, someone, I think it was Donna talking about, I want to get insurance. Get insurance, but make sure you're not falling into the trap of paying these high premiums every month. Make sure that you're not falling into the trap of adding an investment to it. Okay, this is so crucial. That's why you cannot, Slav was talking about investments. I don't think anyone should advise you on investing until they understand your finances. I can't tell you this is the right, this is the wrong, like 100%, unless I really know who you are and your financial goals and your financial needs, right? Because I need to understand, okay, for Ines, what are her needs? What does she need in the next 10 to 15 years? It's going to look different than what her daughter's needs are going to be the next 10 to 15 years. So I can't do the same thing for both of them. It's going to be so different. So make sure that you are doing something based on your needs. Okay? Precious, if you want to unmute yourself, go for it. I see you raised your hand. I'm just letting you guys know you have me until 8 o'clock. Okay?
Yeah.
Precious, go for it.
Yeah, hi. I just want to know if I have $5,000 in the bank and I want to invest it.
Okay.
So sometimes the bank people, they will just say it's 2%. What is the amount that I could tell them the invest that I want to, that it will yield interest for me?
Can you
5,000.
Okay, can you ask me that one more time? What do you want this $5,000 to do for you?
I just want to invest it.
Is this long term? Are you going to leave it for a couple of
for
years?
long term, right?
Okay, so you should be investing it at least 8 to 9%, not 2.
Okay.
Okay, the banks can't offer that, but if you would like, send me a message. We'll do a financial needs analysis. I'll show you different funds that make 9, 8, 9, 10%.
Okay.
So that's what Ines was receiving for her investments. That's what we did. So after I do the financial needs analysis, I'll show you different funds so that you can get the high interest rates. I can definitely do that for you.
Okay.
But I first need to understand what your needs are. So if it's long-term, absolutely, let's do it.
For long term.
Perfect, not a problem. It'll be very easy to do.
Okay.
Okay.
Okay. Thank you.
If I could, that's a good question as well. If I could piggyback on that, and on that note, is there any halal investment on that?
Yeah, I will do everything halal. Everything I do is ethical. Everything I do is halal. I don't sell those insurance policies that are not halal. I'm not, if that's your religion, I have 100% respect for it. Okay. You want to be investing. Okay. Invest, but do it your ethical way. Absolutely. I will do that.
in that term is not fixed though.
No, it's not fixed. You don't want it to be fixed.
Yeah.
You don't want it to be fixed because the profit, it's just like the equity of the home. Some year it'll grow a lot. Some year is not going to grow a lot. That's just the way it is. Not you. You're not going to get fixed, but you will get a good amount.
Okay.
Well, maybe for you, if that's important, maybe you get a little bit less. Maybe it's around 6-7%, but at least it's a lot better than 1-2% at the bank.
Yeah.
You understand what I'm saying?
Yeah,
So
yeah.
if home ownership, Soraya, is important for you, then
Yeah.
at least, and you want to keep it halal, we can definitely do that.
Yeah.
We can start growing, and there's different tools like an RSP loan. Maybe one day I can talk about that as well. And that can give you a head start for home ownership as well.
Okay, perfect. We will have a conversation separately.
Okay, perfect.
Thank you.
My pleasure. Anybody else? I love these questions.
Yeah, anybody else could have questions, they could unmute yourself and ask.
Donna, do you have any other questions for me?
I think we lost some people because of what happened, the connection.
Oh, Donna's on the, okay, perfect.
Actually, I'm trying to get them to post the message first in the chat because we have all the mics locked. Otherwise, if we unlock everything, then it just becomes chaos after.
Chaotic. Okay, no, Donna's good. Perfect.
We have
Otherwise
10 minutes. Mark?
Sorry, what was that?
We have 10 minutes.
Uma, okay, one sec here. Uma, go ahead and unmute your mic.
Omar, can you hear us?
Hold on, her mic went mute again. Uma, unmute your mic.
Maybe can you unmute her?
No, I'm sending her a message. There we go.
Okay. Hi, my name is Uma. I have one question. I want to do like a halal investment, right? And what can I do? This is like I invest my money.
So would it be short? So we would, okay. Just like I mentioned earlier, we would open an emergency fund, something for short term and something for long term. Okay. You want to have both. You can't just have one or the other. So even for Precious, who was asking me a little bit earlier, what we would do is we would start something that's emergency and something for long term. Okay.
Okay.
And just basically build on this. Okay. For as long as you need. You can take out, I don't lock the money, so you can take it out whenever you want. But you want to make sure that at least it's moving up with the economy. Okay. So depending on your needs, I would ask you, you don't have to answer me right now. You can contact me after. I would ask you, what do you need this money for? What is this for? Malika, I want to buy a house. Okay. So then we need to put a plan in place and make sure you know how much down payment do you need. Most of the time, people are unable to purchase a house because of two main reasons: down payment and low credit scores. If we can fix these two, you can buy your house. It doesn't need, oh my God, and I can buy my house 10 years, 15 years from now. No, let's do it sooner than that. Okay. But we would have a plan in place, and maybe, I don't know if you have a lump sum, you want to put in like a couple $1,000s, or you want to put in monthly. But depending on your income, how much room do you have, we would look at that and we would invest based on that.
Okay, I get it. Okay.
Did you take down my information?
Yeah, I can finish your number 647991, and after it's gone, I can write
9284. Here, I'll write it down for everybody again.
Thank you. It goes so fast.
647-991-9284.
By the way, to those who registered through Eventbrite, at the end of the webinar today, we'll send we could send the information, the contact information, and the presentation as well.
That would be great.
Okay, okay,
So
that's
but that's if you registered through Eventbrite, you'll get that email.
mhm.
I think they registered. Maybe I'm gonna post it in Mother's piece.
Okay, okay, it's good. And I have one question. You know the halal life insurance. This is like a I don't know the idea and the how much I have to pay the life insurance.
We would, I can't, there's no, like I said, one size fits all. I will make sure that we keep it at a price that's comfortable for you. And it depends on your age and on your health. And it depends on your budget too. It depends on your budget, right? So if there's no point of giving you a $200 insurance policy, I don't believe in that. So we would get something that, you know, makes sense for you and your family. So during the financial needs analysis, that's a conversation that we will have as well. I'll talk about halal investing and halal insurance with you.
Okay, okay. This
Okay?
is a okay. Thank you very much. Thank you.
My pleasure. My pleasure.
Thanks.
You know, I think it's a good thing that we understand that our finance, we're unique because everybody has different incomes. Everybody has a different family size. Everybody comes from a different background, a different knowledge, right? So it's so important. That's why I believe that finance is a culture, right? We have to understand. That's why I can tell you the same answer for Soraya is the same answer for Ines. It's not going to be the same, and it's not going to be the same for me. So that's why having that financial plan and having that great conversation is going to be so great, and you're going to feel so comfortable. My job is to make sure that you have less anxiety, less stress when it comes to your money. I know when people think about money, they get stressed, they get anxiety, they don't know if the next bill is going to be paid. My job is to make sure that I can help you and guide you so that I can take away some of that stress. Okay, so with that being said, I thank you all so much. May God continue to bless you all. I thank you for listening in and staying till the end of the call. We are definitely going to stay in touch. If you guys want,
Invite you again, definitely. We're gonna invite you again, yeah.
if anybody has any questions,
a little bit. So now we are thinking a lot of stuff that we're gonna be facing, and we will think twice, and we will take this and we will have a next another meeting as well.
perfect.
Sometimes until you have conversation, you don't know what kind of question you're gonna ask as well.
Exactly, exactly. That's why those conversations matter. So
yeah. And you will fight with your kids. Is he okay to have credit card or not? And you don't know what you are fighting for because you don't know if it is a good idea to have credit card or not.
Exactly.
I think we could learn from your lesson. Not everybody has to fall in order to learn their lesson, but yours is a big, huge piece that we could learn from it, and you went through as well. Now we have you, so we don't have to go through, we don't know. Now we have you, so we know what to ask and what steps that we need to take as well. And I just want to say thank you. And Ines, you want to do the closing? Yeah.
Hold on. Ines needs to be unmuted.
Okay.
Got it. Thank you, Mark. Okay, thank you everyone for coming to our workshop. I just wanted to put in, we have a community engagement back-to-back on November 20th. I'll put it in the WhatsApp and our Facebook and stuff. We will have community members to join or anybody to join. I just want to say thank you to Melika for all this information that our residents need of, like I said before, this is why we bring all this workshop for community members, for us to learn more about of how to go about, where do we get the information and how to do things the proper way. So just thank you to everybody, and hopefully we'll I know I will see you, but we'll see you again in our community or in our Zoom.
Absolutely, absolutely. Regent Park is now my second home. I thank you, Ines, for your trust, and thank you, Soraya, for your trust, and thank you, Mark, for your trust. I can't wait to speak to more of you in the near future. Let's, struggle less, learn more, and achieve more. We work very hard, so let's do the best for ourselves and our families. Okay. God bless everybody. You guys have my number. Send me a message anytime.
Yeah, we will. I'm gonna reach out to you definitely. Thank you so much, and we learn a lot here. Despite the technical glitch that we had, um, and I didn't know what was. I thought it was just me, and I didn't know it was all over.
But we made it. We made it. That's okay.
So we came back, and we lost some of the people, but.
Soraya, if you can reach out to them as well and share my information with them, I would really appreciate that. Okay.
This event is we been taped. Also, we will be sharing it in the groups, and we will post it in the Facebook as well.
Okay.
If anybody want to catch up, and if
Soraya, can you add me on Facebook and add me to that group, please?
Sure. Yeah. Ines, you could add her in the Facebook. We will have Mother Space. We will have our own Facebook soon. We are working on it with Mark. So,
okay.
So we don't have Mother Space with Facebook. We just have WhatsApp, but we will have soon the Facebook. We will include you on that, and we will post all of the resources that we have throughout the year, and we will post it soon. Stay tuned for that. So yeah, and we are grassroots, but we do a lot of stuff that to benefit the community as well. To empower ourselves and the rest of fellow community as well. I just want to say thank you, Mark. Thank you, Ines, and I will see you, most of you guys on Back to Basic Community Engagement 101 with Sarah, and I'm looking forward to it as well. That will be also very intimate conversation with her. How can we empower ourselves and engage those community members? What is the gaps? Why people are not engaged in their community? Why don't they take ownership on their community? So that is the conversation on November 20th at 7 o'clock, and we will post the flyer and WhatsApp, and we will send if anybody wants the flyer as well on the people who are signed for tonight workshops. Thank you everyone who participate and attend. The weather was amazing, but you chose to be here, and thank you everyone, and have a good night.